Get ready for this week's TSX recap. I'm breaking down the top movers from NorthFlow Finance AI's monitored list of 10 stocks. Let's dive in and see what went down in the week of June 1st. Welcome to our weekly review segment. I'm your analyst for NorthFlow Finance YouTube channel, and we're starting off with stock number 1, PVFUN.V, where a signal was detected on June 1st, 2026. This signal caught our attention, and we're going to break it down for you. The MA Golden Cross Plus volume surge signal is a pretty strong indicator of a potential trend reversal, and when we saw it on June 1st, it meant that the stock's short-term moving average had crossed above its long-term moving average, coupled with a significant surge in trading volume, which was up 33.9%. At the time, the RSI was at 58.6, indicating a moderate level of buying momentum. This signal suggested that the stock might be gearing up for a move upwards. This week, PVFUN.V gained 3.6%, opening at 17.14, reaching a high of 17.75, and a low of 16.99, before closing at 17.75. This performance seems to validate the original signal, as the stock is continuing to trend upwards. The fact that it was able to hold its gains and close at the high end of its range is a positive sign. The stock's ability to break through the 17.75 level could be a sign of further upside to come. There's been some interesting news surrounding Partners Value Investments, as despite a downward trend in earnings, the stock has seen a significant spike in price, which could be a sign that investors are looking beyond the current earnings and focusing on the company's long-term potential. This could be a factor in the stock's weekly performance, as investors become more optimistic about the company's future prospects. As we head into next week, viewers should watch for whether the stock can continue to build on its momentum, and if it can break through any potential resistance levels. We'll also be keeping an eye on the company's earnings trend, to see if it can turn things around and justify the recent price spike. Now let's move on to our next stock. We're taking a closer look at NextGen Energy, listed as NXE.TO, where we detected a signal on June 2, 2026. This signal was a moving average golden cross combined with a volume surge, which is a pretty strong indication of potential upward momentum. The MA Golden Cross Plus volume surge signal is a technical indicator that suggests a shift in market sentiment, and when we saw it on June 2, it meant that the stock was gaining traction and potentially poised for a breakout. At the time, the Relative Strength Index or RSI was at 52.7, which is relatively neutral, and the volume surge was a significant 69.3% increase. This combination of factors made it an interesting opportunity to consider. This week, however, the stock declined 9.2%, which is a pretty significant drop. It opened at $15.80, reached a high of $17.28, and a low of $14.33, before closing at $14.35. Given this decline, it's clear that the original signal didn't quite play out as expected, and we need to reassess our outlook on this stock. Recent analyst comments from UBS have highlighted the risks associated with NextGen Energy's ROI development, citing execution and funding concerns, which may have contributed to this week's decline. These risks are likely to continue weighing on the stock's performance, at least in the short term. As investors, it's essential to consider these factors when evaluating the stock's potential. Looking ahead to next week, we'll be watching to see if the stock can regain some of its lost momentum, and whether the company can address the concerns surrounding its ROI development. Viewers should keep a close eye on any updates from the company, as well as broader market trends, to get a sense of where this stock might be headed. Now let's move on to our next stock. We're taking a look at stock number 3 of 10, which is CCO.TO, and the signal was detected on June 2. The signal we're analyzing is a moving average golden cross combined with a volume surge, which is a pretty strong indicator of a potential upward trend. The MA Golden Cross Plus volume surge signal is a technical indicator that suggests a shift in market sentiment, and when we saw this signal on June 2, it meant that the stock was likely to see some upward momentum, with the Relative Strength Index or RSI at 57.4, which is not overly extended. The volume surge of 46% on the day also indicated a high level of interest in the stock, which can be a powerful driver of price movement. At the time, the entry price was $166.73, which seemed like a good opportunity to get in on a potential rally. This week, however, the stock declined 5.8%, which is not exactly what we were hoping for. It opened at $153.02, reached a high of $169.09, and a low of $142.90, before closing at $144.09. This performance doesn't necessarily validate the original signal, but it's not a complete reversal either, so we'll need to keep an eye on it to see how things develop. The weekly range was pretty wide, which suggests that there's still some uncertainty around the stock's direction. There's been some interesting news in the uranium space recently, with some analysts suggesting that certain stocks are trading at a premium to the industry, which could be an opportunity for investors to play the sector, and this might be connected to the recent volatility we've seen in CCO.TO. This could be a factor in the stock's weekly performance, as investors weigh the potential for growth against the risks of a correction. Looking ahead to next week, we'll be watching to see if the stock can regain some of its lost momentum, and whether the moving average golden cross signal will hold up. We'll also be keeping an eye on the relative strength index to see if it's getting oversold, which could be a buying opportunity. Now let's move on to our next stock. We're taking a look at stock number 4 of our top 10 list, DBG.V, which had a signal detected on June 2nd. This signal was triggered by a MACD bullish crossover combined with a significant volume surge, so let's dive into the details. The MACD bullish crossover plus volume surge signal indicated a potential shift in momentum for DBG.V, suggesting that the stock was gaining traction and could be due for a rally. At the time of the signal, the RSI was sitting at 57.3, which is relatively neutral, but the 171.7% volume surge was a strong indication of buying interest. This combination of indicators suggested that the stock had the potential to break out and move higher. This week, DBG.V gained 15.1%, opening at $2.45, reaching a high of $3.15, and a low of $2.45, before closing at $2.82. This strong performance validates the original signal, as the stock has indeed moved higher as predicted. The price action this week suggests that the bullish momentum is still intact, and the stock is continuing to trend upwards. The move higher was also accompanied by strong volume, which adds to the conviction of the trend. Recently, there's been a lot of attention on TSX penny stocks with market caps under $600 million, with DBG.V being one of the stocks highlighted as a pick to watch. This increased attention could be contributing to the stock's recent gains, as more investors become aware of its potential. The fact that DBG.V is being mentioned alongside other notable stocks in this space suggests that it's gaining traction and could continue to attract buyer interest. Looking ahead to next week, we'll be watching to see if DBG.V can continue its upward momentum and break through any resistance levels. Viewers should keep an eye on the stock's volume and RSI levels, as these will be key indicators of whether the trend is sustainable. Now let's move on to our next stock. We're taking a look at stock number 5 of 10, TAU.V, where a signal was detected on June 4, 2026. This signal was particularly interesting as it indicated a potential buying opportunity for investors. The MA Golden Cross Plus volume surge signal that we detected is a strong indicator of a potential trend reversal, and at the time, with an RSI of 34.6 and a volume surge of 91.6%, it seemed like a great time to get in on the action. This signal typically means that the stock is gaining momentum and could be due for a rally. With the entry price at $3.46, it seemed like a good time to buy, but as we'll see, the stock had other plans. This week, however, TAU.V declined 10.1%, opening at $3.48, reaching a high of $3.65, and a low of $3.12, before closing at $3.13. This decline does call into question the validity of the original signal, and it's possible that the volume surge was just a one-time event. Despite the decline, the stock still has potential, but it's clear that the rally we were expecting didn't materialize. In other news, Thesis Gold recently raised $44 million through a private placement, which could have an impact on the sector as a whole. This news may have contributed to the decline in TAU.V's stock price, as investors may be shifting their focus to other companies in the space. As we look ahead to next week, viewers should keep an eye on whether TAU.V can bounce back from this decline and regain some of its lost momentum. We'll be watching to see if the stock can break through the $3.50 level, which could be a key indicator of its future performance. Now let's move on to our next stock. We're looking at stock number 6 of 10, which is WCP.2, and the signal was detected on June 4. This signal was a MACD bullish crossover along with a volume surge, which is a pretty strong indication of a potential upward trend. The MACD bullish crossover plus volume surge signal is a technical indicator that suggests the stock is gaining momentum, and at the time, the Relative Strength Index or RSI was at 62.8, which is not overly extended, so there was still room for the stock to run. This signal, combined with the volume surge of 112.7%, was a pretty strong buy signal. The entry price at the time was $17.16, so it will be interesting to see how the stock performs going forward. This stock gained 2.5% this week. It opened at $16.11, reached a high of $17.34 and a low of $16.01, closing at $16.51. This performance does validate the original signal to some extent, as the stock did move higher, but it's worth noting that it didn't exactly skyrocket. The weekly performance was relatively modest, but still in the right direction. There's been some recent news suggesting that investors should be cautious when it comes to buying Whitecap Resources for its upcoming dividend, which could be a concern for some investors, and this might be contributing to the relatively modest weekly performance. This news could be causing some investors to rethink their positions, and it's worth keeping an eye on. The dividend is still an attractive part of the stock's appeal, but investors need to weigh this against other factors. Looking ahead to next week, viewers should watch for whether the stock can continue to build on this momentum, and whether the dividend concerns will start to weigh on the stock price. We'll be keeping a close eye on this one to see if it can break out above the $17.34 level. Now let's move on to our next stock. We're reviewing stock number 7 of 10, which is DFY.2, and the signal was detected on June 5, 2026. The signal was a moving average golden cross combined with a volume surge, which is a pretty strong bullish indicator. The MA Golden Cross plus volume surge signal is a technical indicator that suggests a potential trend reversal, and in this case, it was accompanied by a significant increase in volume, which is a great confirmation of the signal. At the time, the Relative Strength Index, or RSI, was at 52.8, which is not overbought, so there was still room for the stock to move up. The volume surge was a whopping 93.9%, which is a huge increase and a clear sign of investor interest. This stock had a great week, gaining 4.0%, it opened at $65.90, reached a high of $68.85, and a low of $65.45, closing at $68.50. This performance definitely validates the original signal, as the stock has continued to move up. The fact that it was able to close near its high for the week is also a positive sign. There was a recent headline highlighting the intrinsic value estimates for the TSX in May 2026, and it mentioned a few stocks that are undervalued, which could be a positive sign for the overall market. This could be contributing to the bullish sentiment we're seeing in stocks like DFY.to. The fact that DFY.to is being recognized as a potentially undervalued stock could lead to more investor interest. Looking ahead to next week, viewers should watch for whether this stock can continue its upward momentum, and also keep an eye on the overall market sentiment. If the TSX continues to trend upwards, it could be a great week for stocks like DFY.to. Now let's move on to our next stock. We're looking at stock number 8 of 10, which is CAR-UN.to, and the signal was detected on June 5, 2026. This is a Canadian apartment properties REIT, and it's been on our radar since that signal came in. The MA Golden Cross plus volume surge signal is a strong indicator of a potential trend reversal, and when we saw it on June 5, it meant that the stock was gaining significant momentum, with a volume surge of 37.7% and an RSI of 70.9. At the time, this signal suggested that CAR-UN.to was poised for a potential breakout, and investors were taking notice. The combination of the moving average golden cross and the volume surge indicated a high level of interest in the stock, which can be a powerful catalyst for further price appreciation. This week, CAR-UN.to gained a modest 0.1%, opening at $34.98, reaching a high of $35.26, and a low of $34.02, before closing at $35.01. While the gain was relatively small, the fact that the stock held its ground and even edged higher suggests that the original signal is still valid. The stock's ability to maintain its momentum in the face of market volatility is a positive sign, and it will be interesting to see if it can build on this momentum in the coming weeks. The weekly performance was relatively stable, which is a good sign given the current market conditions. There's been some discussion in the media about whether Canadian apartment properties REIT is pricing in the recent REIT interest rate headlines, and this could be a factor in the stock's weekly performance. The question is whether the current price reflects the potential impact of interest rate changes on the REIT sector, and if not, what that might mean for the stock's future prospects. The article suggests that investors are still trying to gauge the impact of interest rate changes on the REIT sector, and this uncertainty may be contributing to the stock's stable performance. Looking ahead to next week, we'll be watching to see if CAR-UN.TO can continue to build on its momentum, and whether the interest rate headlines will have a more significant impact on the stock's price. We'll also be keeping an eye on the overall market trends, to see if they'll support or hinder the stock's progress. Now let's move on to our next stock. Welcome back to NorthFlow Finance. I'm your Canadian stock analyst, and we're reviewing stock number 9 of 10, SES.TO. The signal was detected on June 5, when we saw a MACD bullish crossover combined with a significant volume surge. The MACD bullish crossover signal indicates a potential trend reversal, and when combined with an 87% volume surge, it suggests strong buying momentum, which was confirmed by the relatively low RSI reading of 39.7 at the time of the signal. This signal typically indicates a buying opportunity, and we entered at $21.35. The surge in volume on the day of the signal also indicated a high level of investor interest. This week, SES.TO gained 5.6%, opening at $20.2, reaching a high of $21.66 and a low of $20.2, closing at $21.33. This performance seems to validate the original signal, as the stock has continued to trend upwards. The stock's ability to hold its gains and close near the high of the week is also a positive sign. The weekly range was relatively narrow, which could indicate a period of consolidation before a potential further move upwards. In other news, Scotiabank recently lowered its price target on GFL Environmental Inc., which may have had a ripple effect on the market, but it doesn't seem to have directly impacted SES.TO's weekly performance. The news may have led to some market volatility, but SES.TO was able to buck the trend and post a gain for the week. Looking ahead to next week, viewers should watch for whether SES.TO can continue its upward momentum and break through the $21.66 resistance level. A move above this level could indicate a further rally, so it's definitely worth keeping an eye on. Now let's move on to our next stock. We're taking a look at stock number 10 of 10, which is CSH-UN.TO, and the signal was detected on June 5. This signal was triggered by a combination of a MACD bullish crossover and a significant volume surge, which caught our attention as a potential buying opportunity. The MACD bullish crossover indicates a shift in momentum, where the shorter-term moving average crosses above the longer-term moving average, suggesting that the stock's price is likely to continue rising. At the time, the Relative Strength Index, or RSI, was at 62.5, which is not overly extended, and the volume surge of 34.3% indicated strong buying interest. This combination of factors suggested that the stock had a good chance of continuing to move higher. This stock had a strong week, gaining 6%, and it's worth noting that it opened at $20.24, reached a high of $21.60, and a low of $19.84, before closing at $21.46. This performance does validate the original signal, as the stock has continued to trend higher. The stock's ability to hold its gains and close near the high of the week is a positive sign. Overall, this week's price action suggests that the bullish momentum is still intact. There's been some recent news that could be a cause for concern, with some earnings troubles potentially signaling larger issues for Chartwell Retirement Residences shareholders. This could be a headwind for the stock in the coming weeks, and it's something that we'll be keeping a close eye on. Despite this, the stock's weekly performance was still positive, which suggests that the market is not overly concerned about these issues at this point. As we look ahead to next week, viewers should watch for any follow-through buying or signs of exhaustion, as the stock is now approaching overbought territory. We'll also be keeping an eye on any further news or developments that could impact the stock's price. That wraps up our weekly review. Subscribe for daily TSX signals from NorthFlow Finance. Thanks for tuning in, subscribe for more, and remember, this is not financial advice, consult a professional before making decisions.